welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D trades, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. We'll also get you expert views to find out where exactly can money be made when you're already seeing record high markets. We'll be joined with an expert in a bit, but first up, a quick check on how the benchmark indices are trading as we begin this last half an hour of trade today. 300 points higher now for the Sensex, a 0.5% uptick for this one, 67,529, and the Nifty is also inching closer to the record high levels now, 20,087, currently about 94 points higher in trade and about a 0.5% of a surge for this one too. Let's look at the broader markets. We had been seeing that the small caps were still in the green, but the mid caps were faltering in the morning trade, but the mid caps have also come back into the green now, 40,207 for the Nifty mid cap 100 index and 12,560 currently for the small cap 100 index. But that's one that's up by about 0.9%, so clearly outperforming the benchmark indices after yesterday's sharp fall. Some recovery coming in for the small cap indices. But among the sectors, it's the PSU banks that are shining the brightest. The biggest gain in terms of percentage, about 4% uptick for the PSU bank index in the Nifty sectoral indices, and it's also the day's high level for this one. 4,927 currently for the Nifty PSU Bank. Let's also look at the oil and gas sector and also the metal space. These are the other sectors that are doing well in trade apart from the financials. That's private banks and financial services also doing well in trade. Among the top gainers on the Nifty, you do have a whole host of stocks coming in from the banking and the financial names, the oil and gas names. These are the stocks that are doing, good at this point in time. I think Grasim is the top gainer, 4% higher in trade. Coal India, Bharti Airtel, these are the top movers on the Nifty 50 index. Then you also have Titan, BPCL, these names also doing well. Apollo Hospitals, Asian Paints, these are the other big winners as far as the Nifty gainers are concerned. IndusInd Bank also up in trade, followed by Bajaj Twins, Bajaj Finserv, Bajaj Finance. These are the ones that are also moving up the index higher. Of course, the PSU stocks, they're also doing very well today. You can look at the Nifty CPSE index, that's again up by about 2% today. So BEL, Coal India, Cochin Shipyard, NBCC, NHPC, these are the other stocks that are doing very well. In the F&O space, it's the India Bulls Housing Finance Counter, that's up by 11%. The sharpest mover followed by PNB, Glenmark Pharmaceuticals, Aarti Industries, and that's how the last half an hour of the trade is shaping up. Let's welcome our guest on the show now. Mr. Nipun Mehta joins in, a well-known market expert. Welcome, sir, and thank you so much for taking the time out. So 20,000 there on the ticker. What is the sense that you're getting on the markets right now? After that celebration, we did see a wild swing in the mid and the small caps yesterday. So are you turning a bit cautious on the markets right now, or are you still optimistic with the uptrend and that may continue?
Good afternoon, Sakshi. I think the index touching a record number of 20,000 on the Nifty and going far above 67,000 on the Sensex is essentially is just a number. It's a round number that is there. And it doesn't specifically indicate any specific level, but I think it does improve sentiment quite a bit when record levels are reached. And one has seen both mid caps and small caps rally significantly, except for the sharp fall yesterday. But there's been a fair amount of rally. Most of this has been backed either by liquidity or by fundamentals. So really good retail investor participation coming by, good HNI participation coming by. You are also seeing that as far as IPO subscriptions are concerned. So broadly, good liquidity, good fundamentals, and positive sentiment creating record highs as far as markets are concerned.
So what would you advise an investor out there today, one who is fully invested in the markets? Should they take some chips off the table right now, be it in the pockets which have already run up too fast and too swiftly, the mid and the small caps, or maybe pockets like defense, PSUs, railways, or do you still see a lot of steam ahead and you would say that not the time to hurry and take away all your profits right now?
Sakshi, if you're a trader, you obviously can keep booking profits depending on what's the kind of up move that each of these stocks or some of these sectors have seen. And some of these valuations are relatively stretched when one looks at some of the sectors that you mentioned, which are almost discounting 2026 and 2027 earnings. If you are an investor, well, presuming that you have been holding some of these fundamentally strong stocks for some time, I think, given the fact that the macros are positive, earnings are far better, balance sheets are far stronger. There's a significant deleverage that has happened as far as the corporate sector is concerned, and all of that is something which should hold earnings in good stead. And you could see further up move coming in as far as some of these fundamentally strong stocks are concerned. So if you are an investor, do continue to hold. If you're a trader, you can keep looking at individual stocks and sectors, and keep look at your profits and keep booking profits as and when you feel uncomfortable with some of these movements.
Okay, Mr. Mehta, then, for an investor who wants to deploy fresh money right now, where would you ask them to put their money to? Where would you ask them to put their money in now, be it in specific themes or sectors on stocks? What would you advise them?
So I think on the one side, of course, asset allocation has been stressed enough, and that's where an investor does need to look at even for additional allocation that needs to be made. The other important thing is after this kind of a sharp run-up that we've seen in the markets over the last few months, fresh funds need to be looked at for a really longer-term perspective.
Yes.
Expect short-term profits in whatever you invest is not something that's likely to happen time and again.
Sure.
There are definitely themes, sectors which gradually are looking up after a dip, which could include, let's say, the IT space, which did go through a sort of slowdown, delay in decision making, delay in order flow. That space is something that is showing at least no further negative news. It's getting order flows gradually, and that's something that as a sector could or is expected to show a turnaround. Pharma is another space which has been which has sort of now overcome a lot of the challenges that it had in terms of US FDA issues or order flows coming in from US or some of the Western geographies. That's something that's slowly and gradually changing. So that's another space which could, which has been seeing some investor interest and could be looked at. So probably, I think some of these spaces which still have an opportunity to possibility to grow in terms of earning and a gradual re-rating that is happening, that one is seeing, are sectors one could look at while allocating pressure.
Okay, but do you have any sector in mind that you would say that is the best sector in form and shape as of today?
Well, I think, like I said, these two sectors do make sense to an extent. They also become defensive sectors
Yes.
at times when markets are volatile. One could see market dips coming in the way we saw or we have been seeing once in a while. That's something which will ensure that these sectors will probably, or the couple of sectors that we mentioned might not dip as much as some of these other sectors which have actually run up and where there is significant
Yes.
profit book happens the moment there is an indication of potential market correction. You see a significant profit booking happening in some of these mid-cap stocks. So the couple of sectors I mentioned probably would not or do not undergo the same kind of profit booking simply because their stocks haven't really run up as fast as some of these other sector stocks have.
Correct. Mr. Mehta, also, one particular sector that you'd say that, one should absolutely stay clear from. Would it be railways? Would it be defense? Would it be the PS stocks? Which one would that be?
Well, most of the sectors or you mentioned have been running up significantly. PSUs have run up, defense have run up.
Yeah.
And a lot of these are actually based on order flow, on getting huge
Yes.
export orders. So I wouldn't say that they are not backed by fundamentals. It's just that the actual execution in a lot of these cases is likely to take a few years. It's not in a quarter that some of these orders get executed, and which would mean that while there is a huge order book that is there, execution pace on the one side, and the fact that some of these orders could go on for the next 2 or 3 years in terms of execution, which means that almost 2025, 2026 earnings are getting discounted for some of these sectors. So in terms of valuations, yes, some of these do look stretched, but these are not, don't look to be sectors which one should stay away from. As and when there is a dip that is there, like an opportunity that that investors did get yesterday, as and when there is a time correction that is expected to happen till earnings actually catch up, could be times when some of these sectors which have really stretched in terms of valuations can be looked at going ahead.
Okay. Also, if I have to ask you, sir, like, beyond 20,000, what are the triggers that you believe can continue to provide an upside to the markets? Which factors would those be?
So I think a key factor is likely to be or should be fall in inflation. I think that's globally likely to be one of the key factors, whether it is looking at US inflation and how the Fed is looking at it, or how the Indian Central Bank, the RBI is likely to look at inflation and how inflation actually pans out. And one has had we've had some food inflation kicking in for a brief period. We've had fuel inflation kicking in for a brief period. It's something which has ensured that while inflation is gradually inching downwards, it's not within the levels that RBI has been comfortable with. So I think that's one key factor, which how fast that comes down and how fast interest rates. If there are indications that interest rates would come down, is something that markets are going to watch very closely, because for all corporates that are leveraged, a lower interest cost is something that's going to only add to bottom line, add to margins, and that could also significantly change profitability in the quarters going ahead. So I think that's one key factor, whether it's global or domestic, that's going to be watched by markets fairly closely.
Okay. Also, Mr. Mehta, if I want to ask you, say, particularly when we talk about some sub-sectors, which have already been showing some kind of momentum, be it paper stocks or sugar stocks, how would you look at the cyclicality play right here? Any of these sub-sectors that you believe are now turning into a larger structural story from here onwards?
So both these sectors that you mentioned, and maybe a few others, relatively have been relatively small in terms of overall overall market cap. And when there's more of sort of retail and short-term investor participation that has come about rather than institutional participation except maybe in one or two of these stocks. But broadly, it's been institutions have stayed away from some of these, partly because of the cyclicality of it, partly because given the fact that in some of these sectors there is government intervention that comes about in terms of pricing, in terms of exports or imports, which obviously the market or generally is never comfortable with, and that ensure that discounting for some of these sectors or stocks is always lower than what some of the alternative sectors would have. So having said that, one would think that given the global, let's say something like sugar, given the global demand supply situation, broadly the sector, which has over the last couple of years done significantly well, should continue to perform. Similarly, could be for a space like paper, where particularly before elections, there is always significant order flow that comes by, and for some of the quarters before elections, one always sees revenue bump that is there. So yes, some of these sectors are cyclical, but they have been showing growth, they've been showing profitability, and for at least for a limited 2 to 4 quarter period, they could continue to show a similar trend going ahead.
Right. The stunning move that we are seeing on the PSU banks is also pretty amazing. 4.3% higher on the Nifty PSU banking space. A lot of stocks are inching up by 7, 8%, 9% also intraday levels, led by PNB, Canara Bank. You also have UCO Bank. Some of these smaller PSU banks that are now taking to the rally as well. What is your own sense of the PSU banking space right now? Any particular stocks that you'd like to highlight, or overall as a theme on PSU banks, despite the kind of run up we've already seen and the current price points which are continue to remain attractive vis-a-vis the private banks and other financial services names? How would you advise investors to approach this space, sir?
So it's actually been positive as far as PSU banking space, and I think we've spoken on this a few times on this show itself,
Sure.
in terms of how PSU banks as a space do look attractive, either in terms of now the quality of balance sheets that they have, the ease with which they've been doing fundraising, a lot of them at a reasonable cost. The fact that their NPA levels have come down significantly, the fact that their valuations still are, despite the markets being at all-time high, their valuations are still nowhere close to the peak levels that they've seen historically in the past, at certain times in the past, where price to book for most of them or several of them is still below one. So there are good, interesting public sector banks which have been showing a fair amount of traction. Profitability has been at its best if you look at the March quarter or the June quarter. So there's still some sort of space left as far as some part of re-rating that some of these public sector banks could have. Of course, there is that competitive intensity that is there overall in the retail lending space, in which so many of these banks have started participating fairly actively, coming from the technologically sound NBFCs that are there, which have been focusing on retail lending. But despite that fact, having said that, I think the overall opportunity size within that retail lending space is huge. So one would think, yes, the PSU banking space still continues to look somewhat attractive.
Okay, but would you know, I wanted to understand, because a lot of experts still stick with just an SBI or a PNB, some of the large PSU banks. Is there a case in point after the recent run up as well to continue one's investment in smaller banks? We've seen a stunning move on Bank of Maharashtra, for example, and Indian Bank, Union Bank of India. Is there a case that one can also explore beyond SBI and PNB as well?
There certainly is. There certainly is. I think one of the reasons why some of the larger players get more attention is that there is a lot more institutional participation in that, while in the smaller banks you've seen limited sort of institutional participation. Mutual fund participation again is limited, but there is a fair amount of retail participation that does come by. I think, given the fact that their balance sheets have increased considerably over the last couple of years, given the fact that their profitability has been at all-time high, and they've been very actively lending within the let's say in the retail space, in the retail lending space, and the fact that corporate lending is gradually showing an inch up in terms of the credit growth there, and where again the PSU banks do tend to actively participate. I think there is definitely a case for some of these smaller banks, PSU banks, also to undergo a bit of re-rating going ahead.
Okay. Sir, what's also your take on the pharma space, and how would that be looked at in terms of the major pharma players and then the API producers, the hospital space, the laboratory space as well? And if I have to put in a basket all of these healthcare segments, which one would you be more positive on?
So I think within a lot of these sub-segments that are clearly there, obviously the hospital and healthcare space does look a lot more promising. Clearly, that's one space that is underserviced. There is significant scope for growth. The other, of course, is the CDMO space, as opposed to the generic space, where there could potentially be a sort of flattish growth that could come about. The CDMO space has been showing a fair amount of traction, and that's something that, again, we believe might continue for some more time. Overall, I think pharma as a space, healthcare as a space, is something which did go through its slowdown in the past few years, given the extent of export challenges that had come about. I think that's, like I said earlier, that's gradually changed or is showing signs of change. And the order flow is far better. Exports are far better. The domestic market is reasonably strong. And when one looks at some of these sub-segments, I think the traction that we have seen in let's say the laboratory space or some of the others is definitely reasonably strong. So as a space, it does look positive. One has to be selective, but clearly there is far greater visibility in terms of revenue growth and profitability in comparison to maybe a few quarters back.
Okay, well understood that. Many thanks, Mr. Mehta, then for being with us on the show and discussing your insights on various sectors, segments, and stocks that we've discussed today, and where exactly are opportunities emerging for investors to put in fresh money now. Thank you so much. Always a pleasure having you with us on Business Today TV. All right, let's quickly address one news coming in right now, and that is that Cabinet has approved foreign investment of up to 9,589 crore rupees in Suven Pharmaceuticals, and this is as per an FDI investment that comes that follows in Suven Life Sciences and Pharmaceuticals, and this also would be definitely seen on the stock price. You can see some kind of movement coming in, although not a very sharp knee-jerk reaction on Suven Pharma, with just about a 1.5% uptick coming in on Suven Life Sciences. Okay, now it's actually inched up higher, 7.5% uptick for Suven Pharma. No, actually, that was Suven Life Sciences that actually showed the uptick. And this is Suven Pharma that went up sharply but then came down as well. Just a few moments from now, the news that has come in, some reaction coming in on Suven Pharma, 517.5 currently on Suven Pharma. Let's also look at Suven Life Sciences as well and see what kind of a reaction is that one taking in. So that one is actually showing a sharper reaction of 7.6% at 78.15. We'll keep a tab on the news flow and continue to see what it really means for the company going forward from here. You stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, many thanks for tuning in.
I have rightly chosen the broader markets as far as my investment ideas are concerned. And yeah, I mean, there would be correction. There is no denying about it. Like I just mentioned, there could be a little bit of more pain that is left in the small and the mid universe. So first one is Dilip Buildcon. This is purely based on the infrastructure theme that we are following at Geojit. And we believe with the state election and a big election and the kind of agreements and the commonality that has been signed